Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we got a little bit of a push to the upside above the 786 of this impulse to the upside. Retrace idea of this mean reversion path on the pitch fan that we had price captured in since January. So is it sustainable? Are we going to retrace up to this 382 level and reject? That is what's on everyone's minds. Is this a sustainable move as we enter into Thursday here in Asia? Let's go into the liquidity and see what's up with high block. What is high block? Well, people lock their liquidity into the charts and get burned to a crisp by the market maker for not using a stop loss. So we get to see where those stop losses and crispy characters lie in wait. So let's do that now. Going to the 1 minute time frame. Shout out to everyone here. What's up? So we're gonna so we got that previous push to the upside, reclaiming all that $276 million imbalance of short liquidity that pinged in during the last live, and we said we'd likely come back to it, and we did without hesitation.
Fatality.
And now it looks like they're heading down into the liquidity of the long 50xers. They already took out the 100xers that opened up into resistance here as they reclaimed some of the shorts, and so the imbalance now lies to the longs in the tune of $4.79 billion. So do they consider going all the way down, grabbing all of this and more? Let's go to the external time frame of the 7-day to see what's up with that. 7-day time frame imbalance is still to the upside here at 27k. You do have 4 billion to the tune of 10 billion in this entire region. So coming back down into this to grab the 50xers is par for the course. If it wants to go higher, this retrace continuation idea is to be expected. If there's too much dead weight, it will fail. But let's go and see what is going on with the monthly time frame. Previously the imbalance was to the downside, which was cleared completely. There is still a thick region down below at 23.6 and more. This lines up in with the imbalance on the 6 month and above down here at this 24.3, 183 billion at 24.3, 131 billion 24 even, and nearly 100 billion 23.7. So this entire region is still ripe for the picking, and we talked about that potential idea. If you are going to go lower, you would likely come down, up, and then down again. So how high up do we go on this retrace before a rejection, if we are going to head in that direction at all? So let's go into the Binance chart and save yourselves a little bit of a moment here. So we put out the levels for you for this retrace into the vector candle. This is previous 1 minute pools that got erased to father time, so that's why we marked them off. So are we going to continue into those pools which are erased to memory up here at 27.1 and 27.476? Will this continue? Let's throw on the momentum. This is the bearish trend based fib levels that were being respected thus far, alongside this 886 of the impulse, previous impulse. Do we come down lower is the question. Does this short-lived continue all the way down to the 2 level and take out that pool we just insinuated on the higher time frame? Let's go ahead and throw on our oscillator. What is that exactly? Well, you link in the description for more, and you can go ahead and scroll down to features, toggle every component with the toggle switch to see what it looks like at Bitcoin's local bottom, or read about each component as they come into prominence. All right, so we only got a couple minutes here, so we're going to try to do this quick, short, but sweet. So you might have to play it back if you're trying to interpret these later. So daily cloud is to the downside. You have this bearish momentum sell-off that occurred 7 days ago or so, last Thursday, a week ago exactly. So this bearish cloud needs to be negated, but first and foremost, the super trend up here at 28 even is the bearish super trend that needs to be reclaimed. If we, oops, we need to reload the on the Momentum Master B, you do have this money flow and the RSI coming back together again, and the Williams at an oversold region potentially starting to make a shift up on the daily time frame. Now, if we take this and move to the 22-hour time frame, we're going to see that's already starting to occur. You got the cross-up event of the baselines. Well, what are the baselines? They're your first sign of reversal. It's how you start to drudge your way out. And this is the double bottom idea, which is similar to this. So this is the schematic of actual price action and can also be your guide. Does it look like this or not? And it slightly does. So this is where you start to take the idea for what it's worth, and it gives you a fair amount from that. In this case, a 5% gain from yesterday's update, from yesterday's live. So does it sustain itself? Let's go ahead and take a look. 22-hour time frame playing out here. We talked about that idea as well. If we go to the subtle support of the 12-hour, the subtle support was there. You had the cross up event as of that was being maintained. We talked about the cross up and not to be ignored, and sure enough, you got that volume stepping in with the PVSRA strategy. Does it continue higher? It has room to have that subtle support continue on the 12-hour time frame. Does it continue is the question. We had the previous money flow disparity talking about that as well, saying the disparity on the 6-hour could come back to this, and then it came back. So are you going to get this continuation of the money flow here at the 50? This is where it could make or break and come back up here at that 50 level, getting suppressed here on the stochastic RSI. If you just use stochastic RSI, it doesn't always make sense because you see it pinned up here, so you need other oscillators like the Williams and the money flow and all that stuff to give you a little bit of nuance. Also, the cloud is mighty thick on the 6-hour, so you would have to see some conviction. This is why we stopped it here. We were unsure whether it would go higher or not. So during this Thursday midweek reversal, it needs to make a decision whether it's going to go up and above and continue like this. So does it give a conviction to go higher is the question. So let's go ahead and look at the 4-hour time frame, also overbought. 4-hour has reclaimed the cloud, and this is where you start to see the fractal-like nature of everything, and you see the cloud that was reclaimed starting to thin, and then we came back down into the cloud, and this is where you consider, if you missed that move, whether it's worth taking a shot or not. We broke this 4-hour super trend, which was holding since last week on Wednesday, to the drop to the downside. So we have broken that bearish structure on the 4-hour time frame, getting that bullish divergence as well on the money flow and the RSI that has been steadily playing out after the stop loss hunt. And so the stochastic getting pinned by the subtle support of the 12-hour, perhaps, as we go deeper into the time frames. Hourly time frame. Hourly time frame did reclaim that cloud, and you could have seen that yesterday for the New York Open into that PPI news play. You could have taken that to the upside. It did cross down, but immediately crossed back up. You had the Williams attempting to reset here as well, but we are getting a reclamation of the weighted moving average, this line here. So if this shows some weight to it, pardon the pun, then you could be seeing this continue. So the fractal-like nature of everything does show the same pattern over and over, getting the rejection off the adaptive here outside of the Keltner channel on the 15-minute, broke the bullish super trend on the 15-minute. Can it maintain? 15-minute has reset here. Williams is reset, so you could get a 15-minute play into the daily candle close, perhaps, as you see this little microstructure form. So we need to get above that 6-hour cloud that we just talked about with that arrow to the upside here, this thing. So this is the 6-hour strength that we need to see for a longer swing play to be maintained. In terms of the microstructure here, you need to see this occur here on the cloud right here and now, and make this into London like so. Oops. So in terms of this 15-minute play, if you can get a 15-minute play into the daily close that starts to make this intention known after reclaiming the weighted moving average here, this is about what the 15-minute is about. We reclaimed all of that $145 million of long liquidity on the 50x pool. There is some 100x pool at 26,162 you can look at to reclaim, and there is some more imbalance down at 2661 100x pool as well. So those pools are still on the table. There are some shorts being pinged in as well, but the overall imbalance in this moment in time is to the downside slightly more. Do we hold this cloud is the question. This is the moment of truth for the 15-minute. Do you see this? What is this impulse retrace idea? The retracement here is for I think it's an equilibrium bounce as of this moment in time. We're off the 0.5. So if you're in a bullish sentiment, you would bounce off of the 0.5 and continue. Most patient campers would see this come back to the golden pocket region. So look for a reaction for that. And this is my update and my story, and I'm sticking to it. So you want to see this continue on the microstructure if it is going to cascade to that subtle support of the 12-hour. And this is the midweek reversal Thursday update. Thank you for your time. I must get going. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.